Hey guys, it's Big Mike, and like always, I'd like to thank you for being here today. Today we're doing another AMA with FuturesTrader71. As always, AMAs are recorded. I'll post the recording on BMT sometime later today. As you guys have questions, go ahead and start typing them, and we'll see how many we can get answered today. The AMA is quick and casual. There's no prepared presentation, and we should go about 30 minutes in length. All right, with that, let me give control to FT. All right, FT, are you there?
Yes, I am. Thanks for having me on.
Hey, how you doing?
Let me just throw up a screen here just to provide a visual. First, let me start by saying trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. I'm getting really fast at reading that. All right, what questions do we have?
All right, we got a few. Let me take a look here. Okay, Rex is asking, how do you handle fading an area where there are several levels offering potential fade opportunities separated by not that much distance, such as what might normally be a stop area is actually another potential entry area?
That's a good question. That's a tough one to answer because it's a situational type of question. I'll give you an example. If you look at the chart here that I have up, let me see what you're seeing on it. This chart that I have up, you have an area just below that I'm looking at, that I'm targeting on this drop, which if you watch today's Trader Bite, I don't know if you guys know what that is. It's a video that I put up every morning live where I go through my assessment of the market. And I targeted, I expected a test higher and a drop or chop as one of the trading plans for today, and it's playing that out. And so you have this 1875 area. This really, you can see there's a dip in the volume right here, and so you have that sitting below, which some of you might look at as, hey, this is a potential support area where I'm going to get long back towards, you know, the high of the year right here, 1250. But then underneath it, you have 99.50, which was a top here. You might have some other confluence. To me, and this is not always luxury for everyone, to me, I just scale in if I need to, but this is an advanced way to manage trades. It's difficult to be a scale-in trader, but not having perfected your ability to exit trades when they go bad no matter what. Scaling in would be the way to mitigate that, where you have, instead of going in, let's say you trade a 2-lot or a 4-lot, instead of going 4-lot at 1875, you might take one, watch how the market plays out. It might pop and then drop, and then you add to it at the next level. And then what I do is once I get the second level, I drop the first. I scale out of the first, so now I'm long from below. If it continues to drop, then I might have my third level. But you have to be really, really good at managing risk to do that. So it's not recommended. But if you trade, like, say, a 4-lot, you might just do 1, 1, 1, and 1, and be able to participate with something, even though it's not your full size. If you're a one, all in, all out 1-lot trader, which many are, then you really have no choice but to take the trade, and then just wait to stop out. And then generally, I recommend you wait and reassess context. And that's the thing that I keep bringing up in these AMAs. That I know is a slippery thing to talk about. In that, when you're fading a level, it has to be based on a bigger picture. It has to be based on the fact that the market has rallied, value is rolling over, and it's starting to pull back. And if you're looking for a push in the larger trend, which is from way down here has been up, then that may be a valid long and a reason to add or to take the trade again. But if you're trading in the daytime frame or the intraday time frame or whatever, and you're just buying on a sell-off, you have to see that it failed to take out yesterday's point of control, which is this red line right here. We stopped right at it, and it's falling back out of yesterday's range and into Friday's range, so chances are it'll continue to explore Friday's range until it finds buyers. So in that context, in that time frame, I would not keep adding and stopping out, because essentially what you're doing is you're fading a move lower. So that's why I say it's a complex question. It's a very situational based question.
Okay. Ramon is asking, says, hi, I'd like to get a better understanding of the commitment of traders as shown on the GOM MP. So the GOM MP is Gomi's market profile tool that's for NinjaTrader on the forum. I'm not sure how familiar you are with that. And
okay.
My understanding, well, let me finish reading his question. So he says, there isn't always a positive correlation with the movement of prices. For example, sometimes as prices are moving up, negative COT is much larger than positive COT. So, and he wants you to explain. Ramon, my understanding is that that has nothing to do with the commitment of traders as traditionally defined. It's just a poorly chosen acronym. I think it's some kind of delta calculation or something, but FT, do you have, I'm assuming you can't comment. I don't know if you can or not.
So I don't use Ninja. I don't use Ninja. I used it in 2003, maybe 2004 for a bit, try to help them develop some tools on it. The Commitment of Traders report is a very specific report that's put out by the exchange that comes out every Tuesday that tells you what the different categories, and they categorize the participants in the market into several different categories, and tells you what those positions are. The Commitments of Traders report has too far of a lag to be used by someone who's trading in the 1 to 2 day time frame because you're getting that information really, really late. If it's being done on a platform, my guess it's the volume delta, which is what I use here. So this is a graph here of the volume delta. I talked about this during this morning's Trader Bite as well. As the market has made higher highs, 99.75, 1809 quarter, 1812.50, it has made lower delta. If that's what you mean by a commitment, then that's different. And I'm reading this, and I commented on this, I'm reading this as the aggressive buyers in the market are not participating at higher prices. So I'm expecting this to go choppy with a potential for a correction lower to entice buyers to step in. So I don't think this is a Commitments of Traders report type of question.
No, it has nothing to do with COT.
Okay.
Except that it's called COT. So,
okay.
Ramon, you're going to have to ask Gomi what that is, because I don't remember either, other than it's not COT. All right, Hector's asking, can you be a good self-coach like in Steenbarger's book, or do you recommend getting an actual coach? If an actual coach is recommended, what's the best way to get a good coach?
Okay, so Steenbarger is probably the cutting edge of trader psychology, bar none, above and beyond anybody. I have a lot of respect for him. He's from Naperville. He's near where I live. His book, it's called The Daily Trading Coach. It's one of the books I recommend on my website. Is good. However, nothing will work on a self-sufficient basis if you're not someone who has honed in on the ability to maintain changes of habit. And that's what catches traders, right? And that's why when Mike had his anniversary series back in, I think it was June, right, Mike? The anniversary thing.
4 year.
I recommended, the book I recommended that people got, that the 10 people got, was The Power of Habit. If you're someone who's not able to just make a decision to do something and then follow up on it 100% to create new habits and new routines and new cues, then anything that is self-manage, self-coach is gonna be very, very tough. You know, are you someone, Hector, who can decide that, you know what, I'm gonna stop eating something or drinking something or smoking, or I'm going to create this new habit as a trader of getting up an hour earlier and doing all my homework, or whatever. If you're not able to make that change and maintain that change, which requires discipline and just an attitude of believing in yourself, then self-coaching is going to be tough. However, the second part of the question is, would I recommend a good coach? Now, I've been in this business for some time on a professional basis, and I've come across a lot of people. And I'm going to tell you, not that I want to put anybody down, I'm going to tell you that a good coach on a public basis is just hard to come by. I have not come across someone that I immediately felt comfortable that, yes, this person has his traders' best interests in mind, knows what they're talking about, and is just not another guy who's kind of traded a little bit but decided that maybe he can make more money coaching. Good coaches are found in prop shops. You know, if you look at where Brett Steenbarger is, for example, that's just a perfect example. He's a trading coach, a psychologist, as well as a trader. He ended up signing on with a fund, and as a result of signing on, he had to abandon his Trader Feed blog, which is just an outstanding blog. And by the way, you can go to Trader Feed and read through that stuff, and it's still valid, and it's very powerful, and it's basically, I think it's better than his books. Just look at that. But, you know, trader coaches are generally with prop shops. Prop shops are very few and far between as far as the quality. You know, when you're paying to try out for a prop shop, that's not a prop shop. That's just some sort of a business model that's generating fees through people paying to be a part of it. So, you know, I think you just have to make the decision to rely on yourself, and the ideal situation is that you find someone on Big Mike for whom you become accountable, because that's a huge part. If you have a trading partner where you've come together and decided on what you're going to do as a business, almost like business partners, and you make yourselves accountable to each other for your performance, cutting errors and things like that, I think you'll go much farther than paying someone to coach you.
Yeah, trading journals in general, I think, can help you with the accountability. I mean, no one knows who you are. It's just a name on a forum. So you might as well put everything out there and be honest about what's going on, because that's what will give you the most benefit later whenever you're, you know, reading it again. And that's really what it's all about, right? It's going back and learning from what you've written.
Yeah. Well, incidentally, with you saying that, I know that Attitude Trader is a part of Stage 5, and so is gosh, I forget the guy's name. There was this other guy that was running a journal on Big Mike, who was also on Stage 5, and they really were very persistent about journaling their progress. Who else is worth a follow as an example of what to do, Mike, on your forum?
Oh man, there's probably 200 or so active journals that get posted to, you know, every other day. So it's really hard for me to name one. Okay. But, you know, I mean, here's what I always say. Journals are mainly for the person that's writing them. I think that there is benefit for everybody else too, because you can relate to what someone's going through, and then you could offer them words of wisdom or encouragement, or see where they're making mistakes and try to avoid them yourselves. But really, the true power of a journal, in my opinion, is not in reading someone else's, it's in writing your own, because if you'll just spend just a minute, you know, and I don't mean to load up a journal full of screenshots or spreadsheets. You know, this is stuff that you can get out of your platform at any time. Just spend a few seconds on every trade, right, and just try to document why you took the trade, and why you exited the trade. That's the kind of stuff, in my opinion, that when you go back and read it on the weekend, if you go back, say, 2 weeks and read everything that you've journaled for the last 2 weeks every weekend, you're going to see these patterns start to emerge in your behavior, and you'll be able to figure out, hey, I've got a string through a weakness, right? So it's not...
Yeah, by the way, shocking patterns, by the way. A lot of people just get totally surprised by what they've read after a week or two. You know, they're just like, what was I thinking?
And then, you know, if you keep doing it long enough, some of these journals have been running for years, then it really is, it can really open your eyes to some of the behavioral or psychological, geez, if I could talk, issues that we all face that really on a day-to-day basis you don't see. It's not possible to really see them until you step back and find these patterns.
I want to add, Mike, a couple things that you really need to have on your journal at an absolute minimum. I know you're going to see, if you go through the Big Mike Forums journal section, you'll see all kinds of different mishmashes of things that people do, and you have to make it your own. But the most important things you have to have on your journal is you have to come into the day with some sort of plan. What is your big trade of the day? You know, that speaks to how you see the market and what homework you've done, and it speaks to the fact that you are creating a self-dependency and you're not relying on someone else's blog for what levels they gave you. You should decide. You should write at the top of your journal every day. You know, you can get really elaborate with journals. You can write like what kind of sleep you got, you know, where your mental state is and all that stuff. That's not as important as coming in and saying, today, here are my top 2 or top 3 trade ideas, whether it's stock or futures. Here's what I'm going to trade, here's what I'm going to look for, and here's how I'm going to react. And then what you have to do then is, if the market gives you one or more of those setups, you have to come back, otherwise this exercise is useless. You have to come back and say what you did when the market did that. And be honest, write down, gave me trade number 1, didn't do a darn thing with it, ended up watching it go to my target, really upset, you know, and keep that there. Don't be perfect. And then over time you'll notice that is a recurring theme, and so you start to see that, hey, you know, my ideas are pretty good, I've just not taken them, and then it'll help you be more confident to take them. That's what's going to make a difference.
Yep. Kelly is asking for what is stage 5? So do you want to answer that real quick?
What is stage 5? Okay, you mean the brokerage?
Yes.
Stage 5 is a brokerage that I started with Anthony Giacomin. He used to be with Infinity Futures. He's a close friend of mine, great broker, and I was helping him while he was a broker. He would often run into these guys who were trading at $500 margins and are just blowing up. They're just not risk savvy, and they need a lot of help. So what I would do is, in addition to trading for myself and in my prop shop, I would actually communicate with him as to what to tell them, you know, respond to emails and things like that without knowing what their account size is or what they're doing specifically. And then after a while, what I started to learn is I'm spending a lot of time helping people either online through Twitter or whatever as a community service thing. But I wasn't able to follow through and see what they actually did. What is their real problem? Is what they're describing really the issue? And so he proposed, hey, why don't we start a brokerage that does that? A brokerage that provides really a stable, top-of-the-line technology, as well as risk management, as well as education, a chat room for those people who are dedicated to really making this happen to the best of our ability, and so on, and provide that as a service and just revolutionize the way brokerage is done in the industry. And part of that is that we don't give $500 margins. You have to qualify for those. You have to ask for those and actually prove that you can handle that much leverage. And it's to protect you from yourself is one thing. The other thing is we do webinars twice a week. On Fridays we do sort of an Ask Me Anything session at noon. And then on Tuesday we do what's called a Convergence Tuesday, where I pick a topic or pick someone and just go through their trades, or pick a specific topic and just drill on it for an hour, something that is a trader, something that a trader needs. Last Tuesday was identifying what people think are the obstacles to their improvement. Is it more technical information? Is it psychological? Whatever. Did a poll, and the results are fascinating. So that's what we're doing different. And then the overall strategy for stage 5 is actually a lot bigger. But this is where we're starting. The idea is to just do the best we can, really, at its base, do the best we can to prevent people from leaving the industry, the futures industry. Do the best we can to try to stop people from blowing themselves up, so that you have more people participating in the market and a better, stronger community of traders, as opposed to bringing them in, giving them a lot of leverage, giving them a cut rate commission, watching them churn, and then close their account and go do something else.
Right.
That's the goal.
Right. Yep. And I applaud you guys for going at it. It's definitely a 180 compared to some of the other brokerages out there that are, like you said, focused only on the lowest margins and the lowest commissions, and therefore have the highest failure or burnout or blow up rate, highest churn. You know.
Yeah, I appreciate the question, though.
All right. CP wants to know, how do you set up a volume profile for trading the 6E?
Okay, so let me pull up a chart of the 6E. Here's the 6E. So what I've done with the 6E is I've done like an exhaustive study, statistical study, to figure out when does this product really move. And what I learned, I'd love to bring up the study, but we just don't have the time for it. What I learned is that this market's most active during the UK Open, the London Open, okay, and then it just dies out, and then it picks up again right at the Treasury Open around 7 o'clock or so Central Time, and the US Open at 8:30 Central Time. And so what I did is I created a session. So if you look at the session here, settings for my full Forex, which is the UK-US session, I've made it so that it starts at 1 a.m. Central and goes to 3:15 Central. And based on my study, on my range study, that's when it's most active. The Tokyo session or the Asian session, there's just isn't enough there for me to use, not even in volume. So what I've done is created that, and then based on that, I plot the profile for that whole session. In addition to that, just so I can hone in on certain areas during the day, I have a U.S. session, which only shows me the 7 a.m. to 3:15, so I can see what happened during the U.S. session while the treasuries are open and so forth. But generally, when I'm trading the euro, I'm trading the UK-US session, and that's all I'm interested in, although you can do a 24-hour chart. But I see, you know, when I look at the initial balance and things like that, the normal stuff we look at in market profile, I find that the UK-US session gives me the highest validity at the moment. And I'll change that if that changes. And then as far as the initial balance and so forth, I use 120 minutes, or the first 2 hours of trading, to encompass the UK Open as well as the Bund and Euro stocks and the DAX and all of that in Frankfurt opening as well, because you get a reaction there. So that's the session I'm using, and that's the profile I'm using for that.
Okay. Jim is asking, what, if any, studies for back testing do you suggest for trading crude oil? What makes sense for that product? And he's looking for some type of spreadsheet type analysis.
Okay, so crude oil, the first thing you need to know is when you're going to trade it. Look at the time of day when you're trading. I have a 24-hour up right here, but I'm really mostly trading the pit session, because that's when most of the volume and most of the range is happening. When you do your studies, block off, get rid of everything that's outside of the session that you want to trade. That's first. So you need to figure out what session you want to trade. Is your schedule allowing you to trade the pit session, or do you have to trade it overnight in sympathy with the contracts in London or whatever? Once you've done that, the next thing you need to know is, what is the expected range? Like, what should I expect out of crude on any given day. So you study the range over at least 250 samples, and you decide this is the normal range. It's between X and Y. So you can identify when crude is compressing, when it's just below that range, or when it's expanding, when it's higher than that range. The next thing you want to know, and it's very important for my style of trading, is what is the rotation, what is a normal rotation in crude. So this is a 30-minute chart. This is a 3 Renko. And I've figured out what my rotations are for my time frame. So you go down to whatever time frame you're looking at and figure out what is a normal rotation, or what is the normal distance between a peak and a valley, the high or the low in crude oil, because you have to trade somewhere in between and make sure that your stops and your scale outs and exits are within those rotations. So if the rotation at the U.S. pit open averages out to be 90 cents, then you know that, if you got in late and got out early, you should be able to pull about 50 cents out of any given opening move. That's important to know. But if you come in and say, I want $1.50 and it only moves 30 cents, then you're probably not going to get anywhere with that trading plan. So I need to know that. Those are the 3 things that you need to keep track of. The other thing that I look at for crude is I flip between a daily profile and a weekly profile. The crude tends to move on it trades on a daily profile, but it really respects the prior week's action, because we have inventories coming out every single Wednesday, except for holidays where they shift it around. Look at the weekly profile when you're formulating your plan for crude. That's not something I've talked about before, but it's really important because inventory comes out every week. Okay?
All right, Jeff is asking, once we broke the IB high today, did that skew your hypothesis as far as the 1875 target below?
No, because the context for today is that we're still inside of this balance. So let me get rid of this. All we did was we moved from this balance to this balance to this balance, and we're back in this balance. So the fact that it broke the IB high on a retest higher just means it didn't quite get to that 1804.50 on the first try, and it had to do it after the first hour. No big deal. But in general, when we're in balance, you get more neutral days, which means the IB high and low get broken more often, and then you get the market trading both sides of the opening swing. So that's not really a factor. It's not like, hey, it broke the IB high, therefore, I should start looking for it going up. No, the fact is it broke the IB high and went right to, did I say 1804 quarter? I meant 1808 quarter, which is this yesterday's most traded price. Once it broke the IB high and went to 1808 quarter, I couldn't take it on 2 tries and started to fall back through and out of yesterday's range. The longs are in trouble in that situation. It should not be falling out of yesterday's range and value after getting to the point of control. So this move down here was expected to fall lower, and I posted a chart on Twitter at about 9:30 Central to kind of outline that as a strong possibility. You can go ahead and look that up on my Twitter feed.
Okay. Matthew is asking if you could describe what constitutes a weak high or a weak low, as well as what you look for in a strong high or low.
Okay, so let's look at a weak high. So real quick, let me go back to 8:40 this morning. Let's see. Oh. 8:40. I'll show you a weak high. It's recalculating. Taking a while. So let's look at this morning's action. So here it opens, tests lower, goes up to 1806, falls back to the mid on the dot, goes back to 1806 and starts to fall back through to the mid on the dot. Look at the volume here. The volume is fairly steady is fairly steady until it reaches, let me turn this off as well, is fairly steady until it reaches the high. So here we have volume fairly steadily growing, 3,000, 5,000, 4,000, 7,000, 9,000, 9,000, 12, 13,729 contracts traded at the high on that second push, from 13,000 to 729. So 13,000 contracts traded at 1805.75, which means 13,174 buyers and sellers interacted at that price. That does not show me that this price is too expensive, because if it was too expensive, then those buyers should not have been there, and it should have dried up as price went up. It should have dried up, and we should have had a profile that tapered at the top. We don't. We have a profile that's really fat at the top, and then it drops dramatically. The value drops dramatically. And when that happens, that is a weak high. Why is it a weak high? Because it has not been rejected. It's not being seen as excessive or too expensive. And so sellers come in and take everybody out on the bid and move it lower. It just sits at the high, and it trades, and it trades, and it trades, and it trades, and it trades. And that means that the high is not rejected. And if the high is not rejected, it has a high probability, past performance is not indicative of future results, has a high probability of breaking that high. So this is the description of weak high. A strong high or strong low is much more tapered. So if you look at this, the market drops through the IB, gets lower. It tests twice, but it still does not create a lot of volume that you have a strong drop-off and a blunt high. You see, as price goes down, the volume drops. You see how that's dropping? That's a stronger high. That's not an excellent high. An excellent high is something we have not had in a while because of this rally. An excellent high is one that just spikes. There's just hardly any volume, maybe single, or single, double, or triple digit, and then the market just bounces right off. This is somewhat of a strong low here, and you can see the volume tapering off. But overall, what you want to see is an excess. Much more obvious in a market profile chart than a volume chart, but a weak high is one where the market tests it and it does not move away right away, which tells you that there's enough interest to keep prices coming back to that area, and for that reason it's called a weak high or a weak low.
Okay, Sam asks, he says, hey, I've seen you've mentioned the 96% statistic regarding Globex highs or lows on Twitter. Do you have any other great statistics that you've compiled that you see playing out in the markets on a regular basis?
I do. I mean, there are a lot of studies that I've done where the probabilities are fairly high for something happening. Again, I want to emphasize the fact that past performance is not indicative of future results. So you can't, like, fully leverage your account on a statistic, because we don't know when that loser is going to show up in the data set. We just know over a fixed data set, this is what we got. Things like double IB highs. When the market comes to the IB high, pulls back to, say, the mid or point of control, comes back to the IB high and falls off again and just sits there, the probability of that double IB high holding is very, very low. It's around 18%, which means it's 82% likely to break higher. Yesterday was an instance where it did not work. You see, right here, we had a perfect double IB high. And the expectation is that it would pull back, retest, and on the third test, the probability of this double IB high on a retest for it to hold is like 7%. But it's still held. So we don't know when that's going to work and when it's not. But when I see a double high at the IB, two highs at the IB separated by about 15 minutes at a minimum, it gets my attention, and I start to look for areas to lean against, define good risk, and then turn around and try to take that in the direction of the market. The expectation yesterday was that this would break and we would test 1250 or at least one ticket or something, and it just never gave us that. Yesterday was really a very dull day. So that's another one.
Okay.
But I strongly suggest that you do your own homework. There are things that happen continuously in the market, certain habits, just like there are with human beings. You just need to quantify them.
And speaking of doing your own homework, you actually, FT did a really good webinar on BMT, which I'm looking for the title. The exact title is FuturesTrader71 on Statistical Analysis for a Broader Edge, June 11th of this year. So anybody that wants to know exactly how to put all that together, from getting the data out of your charting platform, or what data to get out of your charting platform, and then how to kind of get started in Excel, that's a really good webinar for that. So guys, we're at 30 minutes. I know there's about a dozen questions that we did not get to, but try to keep these at 30 minutes. So what you can do is you can go to the AMA thread on BMT. If you don't know how to find it, just go to bigmiketrading.com on the top right of the page. In the search box, type in AMA space FT71. Lots of acronyms, and that'll get you to the thread, and you can just post your question there that we didn't get to today, and then FT will comb through that in his spare time, right, FT?
Yeah, I know, and we had, you know, I know you saw my email. I think I'd love to be able to just do a video and hit like 20 of those questions in one video on the thread and catch everybody up. I know I haven't been on there to answer questions very much. I feel bad about that. I want to help as many people as I can, but I might just, you know, if you're okay with it, we'll discuss it offline, but if you're okay with it, I'd like to just take all the questions, put them in a video, answer them verbally, and catch everything up.
Yeah, so guys, just stick the questions there, and one way or the other, FT will do his best to get them answered. All right, so this is the last AMA that we have for this year, so I hope everybody has a really good holiday with your family, and I'll see everybody back, I don't know exactly when, but early January.
Have a great holiday, and thanks for having me on.
Thanks, guys. Bye.
Take care.